Okay, it's the start of June, TMS Insights. Ben,
Got the month right.
got the month right, got the time of year right, which is an interesting time of year because a lot does change. Ben, the old saying is sell in May and go away. It doesn't really work. It's some old English saying, really, but the markets do have their seasonality. We've been through bank reporting season. We had a few September half-year-end companies and March half-year-end companies give us some updates. We had the big Macquarie conference, but macro's been a focus.
Yep.
US debt ceilings. Got a few things to talk about today. We want to touch on AI and what it means as well. So, coming into this time of year, we've also probably strangely had a little low volume. So it's been a little odd again.
It has been. The volumes are awful. Going through the exchange each day, it's we've seen very low levels. Been a pretty good period. Yesterday wasn't pleasant, but apart from that, particularly in America, it's been strong. So the sell in May and go away has not held so far this year. No. It did last year, but as we often see,
it's more of a June thing, really.
Yeah.
So just breaking it down. So the macro environment, we're certainly. We know that we're nearing the peak in this interest rate cycle, but maybe it's not over yet. Inflation's still there. How do you see this one playing out next step?
The bond market's saying there's an 18% chance of a rate hike on Tuesday. It feels to me like there's a much higher chance than that. I think I'd be amazed if he doesn't lift rates, but I think it's one, maybe two. I think we're all looking at, and if you look at bond market pricing, it's now saying some pretty decent rate cuts in a year's time or so. In America, what has lit up their mega caps has been some very good earnings results. And the US market's been quite strong. The Nasdaq's back in a bull market. I don't think there's any doubt about that now. But it has been a very narrow market. That's been getting a lot of talk.
No breadth, is there?
Right.
And some people say that's a bad thing. It's not necessarily. In fact, most bull markets are led by a small group of leaders. And
that's right.
It broadens
filters
out.
Down.
Yeah. But the other thoughts that we shouldn't forget to remind people about is, because it's very hard when you do read and process mainstream media and you get really a lot of negatives, let's face it. The big one for me, Ben, is the understanding of the economy not being the market. And we've said that before recently. But the big one for me was last week when technically the German economy went into recession. The same day the DAX, their index or their stock market, hit a record high.
Yeah, which we've seen in the UK. We're seeing in the US. Like, it's not back to its highs in the US, but markets are taking off while everyone's trying to work out how hard the economy comes off.
Yeah.
And it is. I think it is a misnomer, and I think the RBA is going to potentially push us into some harder times to really stamp out this inflation issue. So it's maybe just something to keep in the back of your minds. We're going to see more talk around a recession.
More talk around it. It doesn't mean that you diet on this negative economic feed, because there's positives.
It also doesn't mean that the market's suddenly going to fall away.
Because companies are doing better.
Right.
Companies are innovative. They find ways, don't they? And some of them benefit from some of these things.
Absolutely. And if you look at, there are pockets of our market I would have some earnings concerns around.
Sure.
Absolutely. But I think we'd say we've got very little exposure in those areas.
Yeah.
Our market is tricky. Like the China reopening has been the biggest fizzer of all time. I think that's been one of the big surprises this year. We all saw what happened in every other country around the world when they reopened. China went so hard on COVID. Everyone thought the reopen would be even more extreme, but it hasn't come through. And I think, if you look at the start of the year, resources were a crowded trade when you look back on it. And we have seen some weakness in commodity prices. That potentially looks like the area to be interested in.
Because it's now adjusted and the prices
have
of the
come
stocks.
off.
But you're right. It was the obvious crowded trade. Therefore, that's
in hindsight, it's always obvious in hindsight.
It's always obvious in hindsight. But the part now becomes is looking forward.
Yeah,
that might be more of a delay on the China story, and we know that in the big mineral stocks. There's a lot of appeal, so we certainly don't change that longer-term thesis.
Yeah.
In fact, now the prices have adjusted down.
Yeah.
It actually looks better.
It looks more attractive. I think $95 iron ore it's not going to be around forever, I don't think. Yeah. The Chinese at some stage probably will step in and start stimulating the economy.
Yeah.
And that could be the area it does well. It's often the things you don't expect are what are playing out. You know, if you look the end of last year, if you'd said the NASDAQ would be up 25% to start the year, I think most people would have thought you're crazy, but that's what's happened.
That's it. And I think the party is trying to be too granular on your thoughts, your actions and all of that. So we have to think a little bit beyond the immediate term. And probably that's not a bad segue into this thought about AI, which is everybody's chat. And in fact, we know that people are very interested because of Google search data, which, we can look at there on screen now and show how that compares to other innovations in time.
Absolutely. So we've put up this chart. Just it's interesting because I think we do find the phone rings a little bit more frequently. People are looking for a way to get exposure. They've read an article, but you can sort of see here that the world does go through, I wouldn't say AI is a fad. It's clearly not a fad, but what I would be wary of is chasing stocks that are supposed winners in this.
Just connected to a thematic loosely, and it doesn't guarantee an investment result for you.
Right. I mean, if you'd invested in the metaverse, there was a number of stocks in that area a year or two ago. Bitcoin, the year or two, or any sort of crypto before that, you were blown apart. That's AI could be one of the most transformational opportunities, and it could be the productivity leap that sees corporate earnings leap over the next decade.
For the bricks and mortar company,
right?
Not the AI company itself.
Winners, which are generally completely unprofitable. I mean, I think if you're going to buy a business that you want AI exposure, it has to be Microsoft. I think that's the one. They own ChatGPT.
Yep.
I've seen on my laptop now that they're now putting ChatGPT, tinker around with it.
And what the other big techs are doing, like Google, wanting you to use their apps and direct search engine because Google search is under pressure.
But they've got Baird, which is...
but it's good. And I think Ben of an old famous Sir Jimmy Goldsmith saying, the English business, and he said, when you see a bandwagon, it's too late to get on. And that's the thing. We've been talking about AI a little bit over a long time.
Yeah.
You need to invest when it's not what the cab driver's telling you about, right?
Completely. Yeah.
So that's of interest. Getting back to the here and now in June, some of the things that go on at this time of year. We know small caps. We talked about breadth in the market. Small caps have very much underperformed large caps.
Yep.
Tax loss selling.
Yeah,
and that's going on. You can see that.
Yep. So that's something that's always a feature. It tends to accelerate into the end of the month. So you do typically find the businesses that have underperformed, either fund managers just want to get out of them before June 30 so they don't have to talk to their investors next year, because that's the one time of the year they have to disclose all of their holdings. So they want to wash those out. People might want to sell stocks to try and reduce other CGT. So it can sort of feed on itself, particularly in those more liquid stocks. So that's always a feature of this part of the market. I think it's really all eyes on Tuesday is going to be
cash rate decision.
Rate decision.
And let's talk about rates, because what we're doing in that part of the investment sphere has become a lot more interesting and rewarding.
Yeah. Well, I mean, it's certainly a conversation I've been having with a lot of clients is, you can now get fairly close to equity style returns in much more conservative asset classes, particularly in corporate debt.
Yep.
A 7% return out of an investment grade backed debt security, which is liquid and very low risk compared to the underlying equity, is now realistic. And it's something I've said to people to think about is 7% starts to get appealing. And
definitely,
I think there's two parts to it. For clients who have got a more balanced or diversified portfolio, it's going to mean that part is doing more heavy lifting for the overall piece, which we haven't seen for the last 3 to 5 years. But it also does mean that all we want to get clients is a good return. We're not too fussed about where that return comes from. It's just trying to get the best return we can. And, it does incrementally start to look more attractive. So,
I mean, in investment theory, it's called the efficient frontier. So if you can get a rate of return at a lower risk rate, you choose it.
Yeah.
And that's what you're talking about.
Yeah.
And that's what we want, is if we can get the same sort of returns in lower risk instruments, that's a desirable result. So it's a really good one.
Yeah.
Obviously, too, in terms of TMS, Ben, this time of year, coming up to end of financial year, a lot of tax planning, whether it's superannuation.
Yep.
You're getting your contributions right and
trying to.
Yep. Pension payments.
Have you done your pension for the year?
Not quite there yet.
Yeah.
But we're on the way.
All right. Over 65.
Getting grey hairs.
Tipped over.
It's almost, mate. So you will be hearing from us, but by all means get in touch, and we'll look forward to bringing you an update later in June.